Hello, everybody. So, I've heard my viewers loud and clear. I've heard people say nobody covers Tesla. No, there's no Tesla on YouTube. Nobody covers them. There isn't enough Tesla coverage, Tesla content out there. And I've decided I'm going to take the bullet and I'm going to cover Tesla for you because, as I have heard, too little content on Tesla on YouTube. But I'll do it very quickly. No hype. So let us talk about the Q1, the Tesla Q1 2023, since there's so little content out there on the Q1. Let's go. So, very uneventful. That's all I have to say. The Q1 results expected was 85 cents EPS, reported was 85 cents EPS, revenue expected was 23.36 billion, reported was 23.33 billion. So it's flat in either way, absolutely uneventful. They have met both the revenue and the EPS expectations, right? That doesn't matter if it's minus 0.1 or minus 0. Or plus 0.2, that doesn't change much. So very uneventful. But if you look under the hood, there's a few things. First of all, operating margin went down compared to Q4 of last year. So from 16, almost 17% to 11.4% in Q1. So that went down quite a bit. Despite that, the cash pile still grew by 200 million. So they now have $22.4 billion in Q1 in the balance sheet. And this is mostly due to the heavy spend, right? Tesla spending heavily, ramping production of Model Y around the world, but not just that. They're also spending quite a bit on developing the Cybertruck, the rollout of the Cybertruck. Lots of capex for so many of the different projects. Megapacks, they're rolling out megapacks. New investment in China, for example, for megapacks. So they're investing heavily, and obviously that puts pressure on the different costs that Tesla has to put forward, and obviously the margin is down for Q1. That is the short run. Revenue growth is actually 24% year over year, so that's good. That's below my threshold, but that's okay. That's good. But quarter over quarter, if you add up everything, you're actually minus 4%, which is not good. I mean, it's really not too great. And I would generally, like, for a company that does not have long-term guidance, I would be very upset seeing that. I'm not upset seeing that when I know a company has given very long-term guidance, because long-term guidance removes uncertainty. And Tesla, even though the Q1 was not very good, they've reiterated their outlook. The long-term outlook in the investor letter was reiterated yesterday. They reiterated, and to me that trumps the short term, and they are writing again, and this is, I believe, the fifth quarter that they write that 50% CAGR target, right, is still in alignment, right? They're still in alignment. They expect to remain even ahead of the 50% target. So that 50% growth target is still there, and is still the one I'm going to be using to analyze Tesla, because they keep guiding this. So they obviously are a company that is very long-term. But as I've said to so many of my Tesla video, it all depends how much trust you place. Now, keep in mind, it's not like management, they have a fiduciary duty. It's not like they can lie. They can be overconfident, but there's risk to lying for top managers and top management teams. So I use this as a credible commitment. When they say it's a 50% CAGR target, that's a credible commitment. To me, that trumps the short term, and I'm very happy that they reiterated that guidance. That was actually one of my main fears, was that they would one time change the guidance. And so I think that's still going to be a fear for Q1 or Q2 or Q3, would be that they change that, right? If they were to change that, the stock would really, really, really hurt, right? It would really go down quite a bit. But given that guidance, I'm okay with, let's call it, not too great results for Q1. But actually, when you look under the hood, once again, and we're talking about revenue slowdown, right? So we're talking about a number in US dollars. And you realize that there is $800 million that is due, like a negative impact to negative foreign exchange. So they have an $800 billion loss due to negative foreign exchange. So this is something that could go in the direction of Tesla next time, right? The Fed will likely be the first country to cut rates, and when they cut rates, then that will have the opposite effect with the dollar going down. So the dollar is so strong right now, and obviously that hurts Tesla as an international company. So I think it's important to look in constant currency. We're not that bad in constant currency, and also let's remember that as of last quarter, they've stopped what they called their end of quarter rush, and so that means that you're still using comps that used rush at the end of a quarter. So taking that into account, it's actually not too bad. The Tesla ecosystem, though, which is most important over the long term, right? They have this 50% target, this 50% goal, and you see that they are not that far when you actually look at the ecosystem itself. Now, Model S and X, I mean, I'll be honest. We don't care about Model S and X. It's really the product that got them started. Towards the 3 and the Y. But really, the models that matter are the 3 and the Y, and it's going to be increasingly just the Y that's going to matter for a company like Tesla. And you can see that Model 3 and Y combined is up 40% year over year. So when we just look at that, we don't see that much of a problem, do we? 40% is actually excellent. 40% year over year in vehicle deliveries. Much of the drop in revenue is explained by the price cuts. Obviously, they cut prices in order to be sure to move the vehicles. Global inventory is still only 15 days, which is extremely low compared to other industry players in the auto industry. Solar deployed is much higher at 40%, right? Storage is the bright light of this quarter. Really, the mega packs are doing really well at 360% year over year growth. They're also growing their service location. They're growing their fleet, right, in the mid 25% range, and they are growing their supercharger station and connections in the 35% range. So if you add this all up and average it, I would say that the Tesla ecosystem is growing between the 45 and 40% range. So again, the long-term thesis for this stock, the long-term target is I believe, still intact and not impacted. Yeah, it's a slow Q1, but Q1 is usually slow for the auto industry, so it's not too big of a run. It's been a slow Q1. So let me now move on to the call and to the takeaways from the call. And this is why the stock has dropped quite a bit, and it's likely going to crash a little bit tomorrow. I would believe. Or actually, this morning, this video is going to be released in the morning. So this morning, the stock's likely going to crash. And that is because analysts only care about pricing. And I counted, correct me if I'm wrong, but I counted in the call, they asked about 5 times about pricing and what's going on with pricing and when are you going to be able to increase prices. 5 times the same question. And Elon Musk 5 times said, well, I don't have a crystal ball, is what he said. 5 times. So I don't know why they felt compelled to ask 5 times that same question. Nobody must have prepared another question, but they all came with the same question. So it's really shocking to me. Wall Street is just pushing and putting pressure for profits and profits now. And I think it's a bad idea. I think they should not focus on profits now. I actually agree with Elon Musk. Musk replied, perhaps sarcastically to them multiple times on the call, that he would be willing to drive gross margin down to 0 because they can drive it down to 0. And they're almost at 20% gross margin on vehicles. They say we could drive it down to 0 and still be fine. And they're the only automaker that can do that. Elon Musk is going for market share. They are increasing market share. They are going for the strategic objective and not the financial objective. It is the strategic objective that is first and foremost. Because Musk believes that each car sold will lead to greater revenues in the future. And that's mostly, of course, full self-driving. If you can activate full self-driving, which is a core part of the thesis of investing in Tesla, especially for investors like Cathie Wood, for example. I suspect Cathie Wood is mostly invested in Tesla because of FSD. That's a revenue that you can turn on right away. Like right away, all of these cars, if FSD becomes good enough, you can have each car start paying $300 and $400 a month just to have the FSD feature. But FSD is not the only thing. Insurance sales is another big one. Charging spend is another big one. If there is ever maintenance needed on a Tesla. That's another aspect, although Teslas typically require way less maintenance. But Musk is looking at the long term and the long-term sales. And perhaps more importantly, the more Teslas you have on the road, the more you get that word of mouth going. You know, the typical Tesla buyer won't shut up about their Tesla and show it to all of their friends. And the more you get data for FSD. So it's kind of this self-reinforcing loop where the more data you have, the better FSD gets. And so this is really, really good for Tesla. And I believe they are correct to deny market share growth to any other players and just maximize their market share. That is the long-term thing to do. Now, what else did Musk say? Musk said that the Cybertruck event is likely coming in Q3. I'm assuming late Q3, maybe September. Musk also said that the lower interest rates will drive sales up tremendously. Essentially, every time the interest rates go up by 0.25%, Tesla has to drop prices to keep the same payment. If you look at the pricing of the car in terms of a monthly payment, the price of the car actually has not changed much. Musk emphasized that on the call, but that was very interesting. And Musk also made a prediction, although he said multiple times that he should not make predictions, but he's made the prediction that things should improve, economy should improve by spring 2024. And he's also made the prediction that FSD may happen by the end of the year. And he joked about that, saying, I shouldn't be making predictions. So, you know, again, investing in Tesla, that thesis, you know, lies a lot on whether you believe in Elon Musk or not. That's like a core aspect of the thesis. Do you believe in the CEO? I do believe in the CEO. I think what the CEO has done is amazing so far. And he single-handedly changed an industry, single-handedly changing another industry in the form of SpaceX and space. So I believe Elon Musk. What else did Elon Musk say? Elon Musk said that he's inspired to believe or to think that Dojo may bring $200 billion in revenues long term, like AWS services. So combined revenues over the long run. He wants to rent Dojo. They keep building Dojos. They're also still accumulating GPUs for their self-driving units and their AI units. He was very positive about that on the calls. Analysts seemed not to care as to what he was saying. He also mentioned that the energy storage would be bigger than the auto business. Now, when he was talking about the energy storage bigger than the auto business, he's talking in terms of energy storage capacity, i.e. the battery content of the storage will be much bigger down the road than what the auto business will ever be. He did specifically say not specifically a dollar amount. It's going to be in terms of really helping the mission of a company, which is transition to sustainable energy. Helping that transition, energy storage should be a bigger business than auto towards that goal. Last thing he said that I think is noteworthy here is lithium refining in Corpus Christi may begin at year end, hopefully if they have governmental approvals. And these are just the main takeaways from the call. So there's really not much new. There's nothing new. I mean, this is really a call for not much, a call for nothing. There is nothing new. We knew it was going to be uneventful, but it was really uneventful. And so my conclusion is what? The stock will keep trading in a tight range, you know, like 175 plus or minus 25 is what I would believe it's going to trade at. And to me, the big catalyst is going to be the Cybertruck event. The Cybertruck event, probably in my view in September. That's going to be, I think a big wake-up call. And it also would coincide, 6 months before Musk's prediction of a betterment of the economy. And so we know that stocks, of course, are forward-looking. So when something happens 6 months away, stocks start getting value based on the optimism of what's going to happen within 6 months. And my last conclusion about the call is that really that call was great for us, for long-term holders, because you still get to buy the stock for cheap, right? I mean, we still have another quarter or two of accumulating, DCAing this stock for cheap, and this is awful for Wall Street. Expect a few downgrades from Wall Street over the next few weeks, I believe, because Wall Street. I don't know how to explain it. It's a little boneheaded. I don't know how else to say. But they ask 5 times the same question. I'm beginning to wonder if they had any other questions coming in. So they asked 5 times about pricing. And did they ask about anything else? Did they ask about the Inflation Reduction Act and the credits they're getting? Did they ask about any of their ideas on marketing and advertising? Maybe push them, maybe find out why they're not doing it, find out a little more as to why they're not doing it. We know they're not doing it, but we've just begun to scratch the surface of their thinking. They could have asked about that. What about buybacks, right? The topic of the last quarter. Everybody was talking about buybacks in the last quarter. All of a sudden they forgot. Now it's just we want sell price. We want high sell price. That's like the topic of the day. It's as if they took like a trending Twitter topic and used that trending Twitter topic to ask their questions. Right? You prepare 15 minutes early before a call. You see what's trending. You're like, okay, everybody's talking about price. Let me ask about price. Didn't talk about Project Island and the reset of the Model 3. Didn't talk about the Model 2. Didn't talk about any of the future gigafactories. Try to push a question maybe as to where the next gigafactory is. Didn't ask any of that. Didn't ask about the next charging station. Didn't ask about the megawatt charger. Didn't ask about Tesla Semi. At all. There was no mention of Tesla Semi. But they asked 5 times about the selling prices and the average selling price. Shocking to me. I understand why. I understand why 2 years ago Musk was like, we're gonna go straight to YouTube and ask the no one or the no YouTuber that I was joking, right? Of course, everybody covers Tesla on YouTube. That's why he was selling that. So anyways, this is my takeaway from the call. Not much. We haven't learned anything new, and analysts, I do not understand. I really do not understand. So be very wary of whatever analysts say about this company. In my view, in my view, Tesla has been out of luck with analysts. I've seen much better analysts on a lot of the other companies that I cover on this channel. Just my view, just my opinion. This is not investment advice. This is just entertainment. Please like, please subscribe. Have a wonderful day. Thank you.